Welcome to the Edge Market Update for the close of March 22nd, 2024, and we continue to see commodities trend higher here overall after the low was set in late February for corn and soybeans. We have a big report next week from NASS. The quarterly stocks report is released. Also, the planting intentions report is also released, where they will project acres by crop for the 2024 crop year. So eyes will be watching that closely, and we will expect a volatile trade on Thursday when that report is released. But we'll go ahead and get started with old crop. To start, old crop contracts haven't been quite as strong as new crop, but they certainly have improved compared to where we were at the past several months. So we'll start with old corn. We're on the May 24 contract. We closed today at $4.39, holding right on this uptrend from the low in February. We closed right above the 9-day moving average. We are trading above the 20-day moving average at 434. If we were to fail here, that's the first support area I'd look to have on the old crop corn. We do have resistance here at the 50-day moving average, which is held pretty much every day on the close all the way back to late October of last year on the May contract. So that's proven to be big resistance. It'd be a big achievement for bulls if we could get price to close above that level. And really, my next target would be to test this negative trend line all the way from the late October high that has proven to be trend line resistance since then. So that would target at roughly 450 to 455 next week. If we could get there, would be a big achievement. If we could get there, would expect a reaction initially there to start, maybe come back and test this trend line again, but we will also have some resistance in that 459 to 463 level if we could break out of this negative trend line. Strength indicators have certainly popped off a lot from where they were back earlier in February, but we are trading fairly neutral right now. Really haven't gotten to any strong readings to where it would warrant old crop sales quite yet, but certainly have improved a lot. Money flows, we were very overbought last week initially when we had a strong run-up, but have kind of consolidated, and we're fairly neutral right now. Long-term momentum, we're still below the zero trend line, which puts us in negative territory, but obviously have seen quite the improvement here in long-term momentum. Things are getting back to more of a more towards a neutral reading, but still in the negative. For new crop corn, we are stronger. We have broken out of the 50-day moving average and tested overhead resistance at 482 down to 480. So we hit that yesterday. We did, markets did take profits today. We did close back lower to this trend line higher from the late February low at 446. We did barely go below that today, but held it at the close. We closed at 475. I think as long as we're above 470 next week, we could continue to see higher trade into that 480 level. If we broke out above, we would probably, trade a bit above and then utilize this support really as a line in the sand moving forward, whether or not things would continue to move higher towards that $5 level, or if we need to spend more time down here digesting this move. But we are trading above the 50-day moving average at 470. The 20-day moving average is at 467. If we were to fail there next week, those are the first two spots I'd really like to see price react at as support. Strength indicators almost got pretty strong this week. We got up to about 60. I want to see 60 to 65 on those readings to really warrant any type of maybe hedging in some way. Money flows, have been stronger. We were very overbought over the past couple of weeks at different times, but on balance have been very strong in the short term on money flows. And again, long-term momentum, we have traveled higher here, closer to a neutral reading, still in the negative, but certainly improved quite a bit compared to we were back when we were in the January and February time frame, which was really frustrating to watch. Moving on to old crop soybeans, we did break above the 50-day moving average, but today we did close right at that level, which is $11.92 a bushel. We are holding that higher trend line from the low from late February at 11.28. Got all the way up to 12.26 yesterday. We can see there's potentially some resistance there, but I really have strong resistance in that 12.52 area, maybe all the way up to 12.60. That's where ideally we could see that hit on this move if things can continue higher, but really want to see this trend line hold. If we start to get a close below there, obviously the 20-day moving average sitting at 11.73 might be a spot we first want to test. But ideally, we got some selling into today's close. Maybe Monday through Friday next week we get a bullish report. We could potentially get up to that 12.50 to 12.60 area to make some old crop sales for guys that still have beans in the bin. Strength indicators didn't quite get strong enough to warrant any trigger on that indicator, but finished the week at a fairly neutral reading, but still very healthy, strong compared to where we were the past 1 to 2 months. Money flows are overbought the past couple of weeks. We've since come back down to a neutral level, maybe resetting for a move higher potentially. Long-term momentum, we are below the zero line, so in the long term we are in negative territory, but we are improving. So that's a really good sign that I like to see. And we've had a couple really good buying volume days this week, so that's really good to see as well. So ideally, we keep holding this 11.90 area. If we don't, we could easily test that 11.73 area, which would determine kind of the next stage of this move. And to finish off with new crop soybeans, November 24 contract, we actually have had a couple sell signals on the market gauges, the weakest sell signal we have, but things have really heated up nicely on soybeans. We did test horizontal resistance here, 12.16 from early January. We did test that on Thursday, and then obviously saw profit taking into today's close at 11.87. But still trading 15 or so cents above the 50-day moving average, which is very good. The 20-day moving average is down at 11.65. So if we did break this uptrend here in the short term, easily could see price test these two moving averages. But really, I would like to see us continue and test that 12.16 level again, and maybe we could fill that gap in the 12.35 to 12.40 area at some point. We have a gap right here in these charts, and typically price likes to fill that at some point. So something that I will be paying attention to if we are able to clear that 12.16 level. We would need some good buying volume, which we've had some really nice buying volume candles in the past couple of weeks, so that's been a good thing. Strength indicators I outlined here, we've had some really good readings. That's why the market gauge is triggered on those days. Again, with money flows as well. We had some really strong short-term money flows. Obviously, price really reacted well on those days. So as producers, we want to sell or hedge into strength, and we're trading quite a bit above our base crop insurance price. Our base crop insurance price is down in the 11.55 area. We're trading all the way at 11.87. Got all the way up to 12.16 yesterday. So that was a really good sign. Long-term momentum, last thing we're going to go over is trending back towards a neutral reading, which is really good to see. So hopefully we can continue this move higher. Hopefully we get some good news next week in the planning intentions report and more good export news. And finally, I want to finish up quickly with the longer-term charts that I talked about all the way back to 2014. We've filled this box down here, which kind of was the inflection point of being in a lower commodity price era or being in a commodity super cycle. And so we tested this bottom range of support, and actually we're starting to move back out. So this is a long-term negative trend line from the highs in corn back from the second quarter of 2022, and obviously we've made lower highs each time. That's currently sitting at about $5.30 on the front contract. So, we might be working our way towards that resistance. That's something I'll keep an eye on here in the longer term. For soybeans, we have the negative trend line from the high in middle of 2022 at $17.84, and we've made lower highs, obviously. So right now that sits at about $13.10. on the front contract. So if we got back there, certainly something to pay attention to. But again, we made our way back into this inflection point that has kind of controlled the destiny for longer term trends and commodities, and we're popping back out of it. So that's a good thing for now. Hopefully we'll at least get a retest of that $13 area on soybeans this year, and at that point it might be a good time to look at potentially taking some action on some crop sales. But until then, we'll just continue to stay patient. We'll keep an eye on the markets, and we'll go from there. Want to thank everybody for watching. Thank you for your business this year on the crop insurance. Excited to work with everybody again, and we'll continue to monitor these markets, and hope you guys have a good weekend watching the NCAA tournament.